Very good evening to everybody. Thank you so much for joining us today on a working day Tuesday and being a part of our webinar. So we have Ajinkya Kulkarni with us, who is the CEO and co-founder of Wint', and he's going to take us through this new bond issue, which is opening on Thursday. And he will also have a short Q&A in the end, where you can ask all your questions. So over to you, Ajinkya.
Yes. Thank you. So this webinar, we have only invited first-time investors, people who haven't invested. So we'll first cover basics of bond investing. So if you have any questions, feel free to ask them in Q&A and we will answer them, right? Uh, First we'll look at basics of bond investing, then about this asset, and this asset specifically has a different taxation. So we'll also look at that at the end and how to invest etc. Right? So what are bonds? Bonds are like loans given to company, which has some interest repayments, and after some period you get the principal back, right? Right. So in equity, you basically get part and parcel of profit and loss. So if there is profit, you share profit. If there is a loss, you share loss. In bonds, you get fixed return. As long as the company is alive, they will give you the interest and the principal, fixed interest. Right? Can you go to the next slide? Yes. So where do bonds come in? Who should invest in bonds? So bonds basically give you higher return than FD, but are less risky than equity. So on risk spectrum, they are riskier than FD, less risky than stock. On returns, higher returns than FDs, generally less return than stocks, right? So if you should invest in bond only if you have higher risk appetite to go beyond FDs, and money that you probably don't want to put in very high risk like equity or stocks, you are okay with little less risk. But essentially bonds have higher risk than FD, right? So you should always remember that. So money that you are okay with risk, but you want to put it a higher yield fixed income product, bond is a great suit, right? But if you're not comfortable with risk, you can stick to FDs. You should stick to FDs. What are the risk etc? We will discuss as we go. Yes. Today's language of presentation is going to be mainly English. Somebody said, please speak in English, speak in Hindi, but we are going to stick to English for today's webinar at least. I'm sorry, but we are going to stick to English. Yes. So now if you see bonds are either issued by, government, which are called government bonds or government securities. And second is private bonds or corporate bonds, right, which are issued by private companies. A majority of these bonds are issued by NBFC bonds, NBFCs, right? What are NBFCs? NBFCs is a non-banking financial corporation. So these are basically lending companies who give loans. They are regulated by RBI. They get licensed by RBI, and then only they can lend. They can't take deposits, but they can raise money through debentures or bonds, right? Why majority of private bonds are of NBFCs? The reason is that for NBFCs, they give out loan, and for that giving that loan, they have to borrow. So money is like a raw material for them, right? So on Wint', you will majorly find Wint' bonds. Yes, there are some question that I'm going to cover through presentation. So I will answer after the presentation, right? Yes, can you go to the next slide? Yes, so even in bonds, in these NBFC bonds, there are different types. The most secure ones are senior secured bonds, then senior unsecured bond, then there is subordinated debt, then there is hybrid, which is mixture of equity and debt, and then there is a pure equity. In senior secured bonds, there is some collateral, right? Therefore, they are of the list risk. And what is that collateral generally? It is some pool of loans. Let's say if any housing company has given a bunch of loans, then these loans repayments are used as collateral. So if the company is not able to pay, the repayments from this company, the loans are used to pay the bondholder. There is a due process in between, but at least you have some collateral or security to rely on. Yes, can we go to the next slide? So we just look at comparison, right? Compared to this comparison between senior secured bonds, unsecured bond, and subordinated bonds. Secured bonds have collateral. So in case of the NBFC is not able to pay, if the NBFC goes bankrupt, you have some collateral underlying that you can use. The risk is medium compared to or lower compared to other bonds. The returns are also lower. And in case of bankruptcy, the senior secured bonds have first priority. So on Wint'12, you will only find senior secured bonds on Wint'12 platform, right? So that there is a collateral. So that is used to mitigate or manage the credit risk. Can we go to the next slide? Yes. So if you go for any high return product, you are signing up for high risk product, right? There is no product in the world where the returns are high but risk is low, right? So then what are good investment products where that risk is managed well, that risk is mitigated well? If something goes wrong, there is some management mechanism to balance that out, to manage that risk, right? So for example, in equity mutual funds, you're expert setting. So they're choosing, there is a well diversified portfolio. You are not putting all the money in one stock, right? There's some restrictions also from the regulator. So that's how the risk is managed, right? Now in bonds also, these bonds also, it is not as low risk as FD, but there are certain risk and they are also managed, right? How they are managed? First, understand the risk. So first is the liquidity risk of money being stuck, right? If the bond has maturity of, let's say, 1.5 year and you want to sell it after 6 months, you can sell as long as there is a buyer. On Wint'12 platform, you can come and sell. We have already automating that flow. Today it is completely online. You can sell. We also help you find buyer. We are a platform. We do not guarantee liquidity, but we generally you will be able to find buyer. So that's how you mitigate liquidity risk. Second liquidity risk is if NBFC goes bankrupt, it often takes time for repayments to come to you. It should take 6 months, but we have seen it taking longer, right? So in that period, your money is stuck. How do you manage that risk is by diversifying in different bonds. So you don't put all the money in one bonds, right? Uh, and then you diversify, and that's how you mitigate liquidity risk. Credit risk is risk of losing money actually. How do you manage that risk? Is by choosing a very good NBFC with very good financial health. We do our due diligence well, and only NBFCs that pass our due diligence criteria, we bring it on the platform, right? Now, what is the fraud risk? Fraud risk is money being lost because of fraud, and this fraud is a promoter fraud. Promoter doing this fraud, right? Now, how do we mitigate this risk? We check for promoter backgrounds, their reputation in the market, the corporate governance at the end. We see who are the auditors, what are the corporate governance practices. We take blind check feedback from the market. We visit branches, we talk to borrowers, and then only we bring the asset on the platform. Now we say we do all this diligence, and what is that quality of diligence? How can you be sure that if Wint is doing diligence, I can rely on that diligence to take a call. So we also co-invest money in this bond. So we invest 2% of the bond issue. Generally, if the bond issues of 10 crore, we will invest 20 lakh. And in generally bonds, we make about 1.2%. So we only get paid at the end when the bond repayment is successful, right? So we have a skin in the game, right? So that's how we mitigate all of these risks. Can we go to the next slide? Yes. Till now, we have sold bonds worth 2,150 crore plus 64,000 people have invested with us. 1,300 crore has been repaid, right? We haven't seen any default, any stress, any delays in repayment from any of the NBFC, right? This is just to tell you about our quality of due diligence and also the kind of trust that our existing investors have with us. Can we go to the next slide? Yes. Now now we'll discuss this particular bond. So Wint Capital is our own NBFC. I'm of the CEO of that NBFC. So obviously there is a conflict of interest. It is our own group company, right? I will try to give this presentation without any bias, right? And we'll answer all the questions honestly, right? But just to declare, in Wint'12 is our own NBFC. It is 100% owned by our holding company. And this holding company also owns close to 100% of the bond platform also, right? So Wint Capital is our NBFC. The main name, the official name of the NBFC is Ambium Finserv, right? And what we do is we lend to other NBFCs, right? So we don't do any retail lending. We lend to other NBFCs. In turn, they lend to other NBFCs. And the loans that we have given to other NBFCs act as a collateral. Right? Can we go to the next slide? Yes, this is the group structure. Wint Group is a holding company, 4 Degree Water Capital. Bond broking platform is 4 Degree Water Services, and the NBFC is Wint Capital or Ambem FinServ. Yes. What is the business model? We basically raise funds at 11-12% and give it to other NBFCs at about 14 to 16%. So we have 3-4% margin, and that's how we make money, right? And we lend to only other NBFCs. Because we lend to other NBFCs, ours are chunkier loans. Therefore, our OPEX is also low, right? Can we go to the next slide? So what do we look at when we basically give out to loan to other NBFCs? Are they growing well? Is their business model fundamentally sound? Will they keep earning money? What is the kind of promoters that these are running that company? What is the leverage that is there in the business? And what is the portfolio cuts, or what are the NPAs? Is it very high or low compared to the market benchmark? So there is a whole list of data that we look into, and we also do a lot of on-ground visits before disbursing loan to any NBFC. Yes, this is our board. I am co-founder and CEO. Then Anshul is there, my co-founder, who is a CBO. And we have 2 independent directors, Mr. PK Das sir, who was earlier ED at IDBI, and Maslikar ma'am, who is a practicing company secretary for 20 years plus. Yes. Yes, so this is the senior secured bond. Our rating is BBB- by CARE. Security pool is 1.1x. Fixed return of 11.5%. Interest payment is at the maturity. Principal repayment is at the maturity. So this bullet, there is no in between payment. Asset size is 12 crores. Launch date is 28 November. So which is Thursday, right? Can you go to the next slide? Yes. So these are certain. So when we issue a bond, or when we list any bond on the platform, we make sure we have put certain conditions, right? First is company must maintain CRAR is of at least 18%. CRAR is basically kind of equity that you have to maintain, right? This is to absorb all the losses, any bad cycle that the company goes through or the economy goes through. To cushion that, there is this equity. Cumulative mismatch between the asset and liability up to 1 year must be positive. So like this is like every month we have to repay our bondholders, and we get some money from our loans that we have given, right? The money coming from loans should be higher than the money that we have to give to our bondholders, right? Or the loan, our lenders, right? That makes sure that even in next 1 year, if we don't get any loan, company can sustain and there is no default because of liquidity. PAR 90 shall not exceed 3% of the gross loan portfolio, right? So these are certain terms that we have put. Can you provide? Okay, so just to let everyone know, this webinar will be available on YouTube. Link, if you need, you can ping to our customer team and they will share the webinar link with you, right? Right. What are the comfort points? Now, I'm like, this is the most biased section because it's like I'm only praising my own NBFC. But whenever we bring asset, we talk about the comfort point and concern points. First, we'll talk about the comfort point. Although the NBFC is new, the management we have been running this business now for 5 years at a platform level, right? All our lending team is very well experienced in the sector. And we haven't seen any default. And most of our team comes from a rich experience of 5-10 years in this sector, and they know the sector in and out. Good portfolio quality. There are no overdue payments. There is no default that has happened, no delays that have happened. And healthy debt to equity ratio. The leverage is 2.6 crore and the net worth is of 60 crore. So leverage is less than 4, which is a good sign. Right. Can you go to the next slide? Yes, the concern point is we have a limited track record. As a platform, although we have 5-year track record, the NBFC operations are 1 year old, and the NBFCs we are giving loans to are a different set of NBFC compared to the platform NBFC, the NBFCs that we bring on the platform. Right. Although we have an experienced team, but we haven't seen cycles in our own NBFC. Moderate profitability, since we have recently begun operation, profitability is currently modest. Uh, as the business grows, as the AUM grows, business profitability will also increase. Yes, these are the NBFCs that we have lent to. Majority of them are either vehicle loans or unsecured SME loans. Some of them are digital PL. We have hardly done any MFI, and we haven't done any real estate finance. So when we say real estate finance, it means loans given to builders. If the loan is given to the end customer, we call them housing finance companies. That we may do, but real estate we haven't done anything. Right. Some of them are gold loan businesses also. Yes, our holding company investors are marquee investors. So Rainmatter is arm of Zerodha group of companies. 8 Road is a venture arm of Fidelity Group's founder. Better Capital is there, 314 Capital is there, and Arkham Ventures are there. Right? Can you go to the next slide? Yes, our current lenders include 2 banks, AU Small Finance Bank and Shivalik Finance Bank. Then there is Mass Financial Services, which is a listed company, and Oxizo, which is a group company of, I'm forgetting the name. That's okay. It's a big B2B startup, right? Oxizo. Okay.
Of business.
Of business. I'm really sorry. Yes, of business. Yes. Yes. Now coming to the taxation, right? Now, so I'll also explain the taxation bit. So this is a deep discounted bond. That means you invest some 87 rupees, and then you get 100 rupees at the end. So such bonds you basically buy at discount, and at the end you get 100 rupees, right? And there is no payment in between, no TDS in between, etc. Right? Now these are listed bonds, and up to 1 lakh there is a different taxation. What is that taxation? So at maturity, if you hold till maturity, you will have to pay. So if you, let's say, invest 87 rupees and you get 100 rupees at the maturity, so this 13 will be treated as interest income as per your tax slab, right? Now, if you sell before 12 months, it is also STCG, which is again as per tax slab. Now, if you sell after 12 months, but before maturity, then you have to pay 12.5% LTCG, right? And this is only applicable if your total investment is this deep discounted bond, not one bond per PAN or across all ISINs or across all bond should be less than 1 lakh rupees. In that case, you pay LTCG, right? If you sell before maturity. Right. I'm gonna be like, can you go back? So when we say this bond can be a low tax bond, what you can do is you can buy the bond, and after 12 months before maturity, 1 week before maturity, 1 month before maturity, 1 day before maturity, if you sell, all the gains will be as per LTCG. So if you are in actually 30% tax bracket, you will basically save about 20%, right? So this is a good benefit for people who are in 30% tax bracket. Yes, can we go to the next slide? Yes, you can invest 24/7. Once you invest, first you have to do KYC. Once you invest, you receive bonds in your Demat account, which you open your Demat account with NSDL, right? And you can invest 24/7. If you face any problems, you can reach out to our customer education team, and they will solve your questions. Can you go to the next slide? Yes, this standard disclaimer, you can go through it. On top of it, again, I will, in case you missed, I will again reiterate, Wint Capital is our own NBFC. I am the CEO of the NBFC. I have given you the presentation and the details with our best of knowledge, but obviously there is a conflict of interest and you should be aware of that. Right? Yes. And if you have any questions, you can reach out to us on hello@wint12.com, or you can find out, you can reach out on WhatsApp. This is the WhatsApp number. The button is also available in the app or on the website. Right. Yes. Can we go to the next slide? Yes.
So, Ajinkya, we have some questions, from our attendees over here. So, should we move to the
Yes.
the Q&A? Okay, perfect. So first question is there from Mr. RG. Please share the specific of the low taxation bond, what and how of it. So if you could just explain very simple basis, like everybody over here, it will be helpful.
Yes. So these are deep discounted bonds. If your total holding is less than 1 lakh rupees, and if you sell before maturity, but after 12 months of holding period, you will be able to get LTCG on the gains, right? As simple as that. And LTCG is 12.5%.
Okay, because this is a listed bond.
Yes.
Okay. Next question is from Mr. Bikash Ghosh. What are the difference between private placement and public listing bonds? If you can just tell.
Yes. Private listing, there is this pre-decided investor invest in. So the ticket size is higher, 10,000 rupees. If there are higher compliances, if there are lower compliances or lower disclosures, compliance is similar, my mistake. If there are lower disclosures, then if the issuer goes for lower disclosures, then it is 1 lakh rupees. If issuer goes for higher disclosures, then it is 10,000 rupees. In public issue, it is 1,000 rupees, right? In public, it is like IPO, you subscribe and you get it. Post listing, I don't see there is much of a difference. The bond is secured and in the same category senior. These, just because they are publicly issued or privately issued, in their seniority of repayments, they don't come. They are similar, like they are very same. Not that one is above and another is lower.
So
Yes.
to simplify it, in privately placed bond, the investors are already known and they just invest in it and it's closed. In
Yes.
publicly issued bond, it opens like a like normal equity. People can bid for it, and after the 15 days or 20 days, it gets closes and allotted to the investors. Correct?
Yes.
Perfect. Next question, same by Mr. Vikas Ghosh, is I do agree that NCDs give more returns than prevailing FDs in most of the cases now. But NCDs cannot have the edge over FDs as far as liquidity is concerned. Even the penalty for premature withdrawal of FDs are less than the discount we need to consider while selling NCDs before maturity date. The buyer is required for selling NCDs, whereas in the case of premature withdrawal, it is very simple without this condition on FD hissing. So please deliberate more on this to understand how the Wint12 can address this issue as an OBPP for its customer to be customer-centric OBPP as compared to other OBPs. He's saying, can you solve this liquidity issue is what he's asking.
Yes, so we will solve liquidity issue. We are rolling out that program. We are experimenting, and we think generally liquidity will be there in the available market. But whatever we do at whatever scale, it is never going to match the FD liquidity. In FD, like it is called fixed deposit with a bank, it is guaranteed that bank has to give liquidity as long as they are alive, right? So in case of bond, that is never going to be there. You can only sell bond. There has to be a buyer. Generally, there will be a buyer. But in some extreme events, whether if the NBFC, let's look at Navi as an example. Now, for even for Navi bond, there is a liquidity. But when the news came for that week, nobody was ready to buy Navi bond, right? So in these extreme, something like COVID happens, or like let's say nuclear war. I mean, I hope it doesn't, but then there will be no liquidity, right? In case of FD, there will be still liquidity. So it is unparalleled. FDs will always have better liquidity than bonds, right? And again, I will reiterate this. If everything, FDs also have up to 5 lakh insurance, right? For that matter. And we also have FDs on the platform. You can see, right? So that's not a problem. If everything was as good as FD, the returns will be also as good as FD, right? So if you're not okay with the risk of bonds, don't invest in bonds. And maybe if you understand risk and if you're okay with risk, you can invest in bond. But some things will be good in FD, something will be good in bonds, right? Returns are good in bonds, some risk is lower in FD, right? So there is always going to be some trade-off that you have to do.
Correct.
Yes.
I'll move to the next question. Under NBFC selection criteria, one criteria which we have kept is less than 4 leverage. What is the basis of this criteria? That is, why it should be less than 4?
Yes. So what we've seen is historical NPAs. When the industry goes through bad cycle, what are the NPAs? Right. And that's how we build comfort. And this 4 is minimum. Uh, Sorry, only in 2-3 NBFCs we are okay with, 2-3 types of NBFCs we are okay with more than 4. One is wholesale lending, the kind of lending that we do. We like if there is a bigger NBFC and we have bought on such bonds where we have allowed higher leverage. Second is gold loan NBFC. But other than that, we want all the NBFCs to have leverage less than 4. In fact, some unsecured, especially digital PL, digital PL NBFCs, we think even 4 is low. 4 is high. It should be in the range of 3, right? So it is basically by looking at what are the historical worst NPAs, and if that scenario plays out, is there enough cover to sustain the business and also depth of capital to keep that business as a going concern, right? So based on that many factors, this is one critical factor, and then there are a bunch of more factors. What is AML, asset liability, ALM mismatch, etc. And then it basically we derive at that. But if anything above 5 is anywhere risky in a risky terrain.
Got it. So next question by the same person. Presuming you are into microfinance, what percentage of portfolio is microfinance? And how does RBI recent guideline on microfinance lending, impact the business?
I don't think we have done any microfinance.
We have one NBFC is there of microfinance in our portfolio.
So team, can you check what is the current exposure and what is that in terms of percentages?
I'll tell you, I know the number. So it is only one NBFC and the total, one or two NBFCs, and the total portfolio is 5%, which is in microfinance. Entire split of the entire 100%, only 5% is in microfinance.
Yes.
And the next
How
question
does
is,
recent guidelines on microfinance lending impact the business? We were seeing like that business that sector going into stress. So we are well prepared for it. And also our exposure is on the very less side. We don't see much of a concern for us, but as a microfinance sector, I mean, it is a tough time.
okay. There's a question from someone. My finance knowledge is good, sir. I know you are new in this market, but can I work with you is the question.
Okay, please send us your resume. We will discuss.
Yeah. 2% that Wint will invest in NBFC that are bought in the platform is through Wint Capital NBFC, or how is asking?
So it is not necessarily Wint Capital. It is Wint Group company. So it could be the broking business itself, or the holding company, or the broking or the NBFC.
Perfect. Okay. Next question. How much has Rainmatter invested in your company? That is absolute number and percentage.
They must have invested about 12 crores in the tunes of, and they own about 10%.
Okay. Hi, what are the tax implications for the return on periodic interest and partially return of capital after TDS 10% correspondingly?
Periodic interest, it is as per your tax slab. TDS is 10%. So if you if you're in 30% tax bracket, then you have to pay 20% again, right? And so on, right? If you're in 10%, then you don't have to pay anything extra. If you're in 20, then you have to pay 10% extra.
And they can claim the TDS back, right? If they don't fall in the any tax. Next question is by Devojit. If we plan to sell after 12 months and before maturity, how will the interest secured / XRR get calculated?
See, there if we will obviously enable selling on the platform, right? And that depends. The XRR depends on the buyer what you are ready to offer. But you can also sell that bond to your relative, to your wife, to your brother, etc. As long as you are able to sell, you can claim LTCG, right? So if you think that if like let's say you want to sell 1 month or 1 week before maturity, and the buyer is asking for too much discount, you can choose not to sell to him and you sell to someone you know, right? And you can negotiate the price obviously with your brother and wife, and you can get 11.5% XRR. We don't see any problem with that.
What is the tax if you offer monthly yield payment?
So in this bond, you cannot opt. You have to invest in a bond that gives you monthly interest payment. And in that case, it will be taxed as per your tax slab.
Next question is, what is the coupon rate for this particular bond?
Coupon rate is some 0.1% or something, or we
Yeah.
have kept it 0%. Very low. It is basically a dip discounted bond.
Yeah, it's zero only. Like. Next question is, why is the taxation different here? So if you could just explain the concept again once.
Yes. So I think the origination of the reasoning is that in a deep discounted bond, it's very difficult to calculate taxation. So government basically said, if you invest up to 1 lakh, you are a retail investor, so you take this discount because you can't really find the price and then pay taxes. So therefore, you can only, and even in bond, like some of it is basically accrued interest and some is a market appreciation of the asset, right? So you can't really differentiate. It is very hard to differentiate if deep discounted bond. So government basically, or the IT department basically said, if the holding is up to 1%, 1 lakh rupees, then you make everything as gains and just move on, right? But if you are investing, let's say 2 lakh or 5 lakh, uh, then you have means to find out. You probably like you should spend time and pay tax as well, right? So therefore, it is meant for retail investors who invest up to 1 lakh.
If somebody is holding it till maturity, then it's as per tax level, right?
Yes, because then you don't have to find the price. You invested like at let's say 87 rupee 85, and then you went ahead and did 100 rupees. You got 100 rupees, so everything is interest income.
Next question, on this deep discount bond, is there a buyback guarantee by your bank, or example buyback guarantee few days before maturity to avail the low tax benefit that you alluded to?
No, I like the buyback guarantee doesn't work. There is no guarantee, first of all. And if we do buyback, then everything will become anyway interest income, right? Before maturity 1 week. So you have to sell in the market, and that market could be on exchange or on Wint platform through RFQ mechanism, or someone you know could be a relative, anyone for that matter.
Okay. Next question, if you are lending to other NBFC, why should I invest in this bond? Rather, I should lend the NBFC directly without any middleman in between to have better return.
Yes. So one of the thing is these NBFCs are very small NBFC. So we like, and then none of them, I don't think any of them would do listed bonds, right? So an unlisted bond is a very difficult, like if it is a very risky territory for retail investors, because there is no hardly any information available for retail investors to sit at home and do this diligence becomes very complex compared to listed bonds. So nothing stops you. You can actually do it, but even like even if you lose money in one bond, it will wipe out your gains. Mainly because it is unlisted, it's very tricky, right?
So Anshul, similar question, no, Ajinkya, Anshul, what he had said that there is a lot of due diligence which goes into, finding these NBFCs. Also, these NBFCs, when they are borrowing money, they don't borrow like, 10 lakh, 20 lakh, 30 lakh. They borrow like 3 crore, 5 crores and all that because they want a larger amount. So whatever due diligence you go to do on your own and you go to park your own money and everything, it will ultimately cost you same thing only, which is Wint Capital is doing for you. That is one of the reasons why you should invest in Wint Capital bond. Plus, your risk is mitigated because Wint Capital has its own 60 crore in place.
Yes.
So this is what Anshul says. Okay. Next question is, does Wint have any investor awareness program aimed at educating how potential investors can conduct their own research on any Wint listed bond companies for reassurance?
Yes, so we do this webinar exactly for the same purpose, right? And if you want to understand about any bond, then we are happy. We are happy to. You can call us, and our customer success team can get on a call, and answer you. Yeah, next question I will only read out. Other platforms provide a buyback guarantee for all bonds purchased through them at 2% discount always. Does your company provide it? If so, please share specific. If not, are there plans in future to bring this feature? The platforms who provide such guarantee are going to come under regulatory scrutiny. It is illegal to do so, right? So it is going to stop. No platform can provide that buyback guarantees, our understanding, right? That is the reason, right? Like we don't have such plans. It is illegal to do so.
But we are going to enable liquidity, right? We are not going
Yeah.
to.
So as a platform, we'll enable liquidity. There will be buyers. They are generally buyers on the platform, but we cannot provide buyback guarantee.
Can you please explain a little bit about dirty price and clean price?
So it's a complex concept. Like once you like we can answer this question in investors webinar. For new investors, like we have made things very simple, so you don't need to worry about it. Just look at the money that you invest, money that you get, and the XRR you are able to make. Right. I'm sorry, I'm going to skip this question because if I answer this question, it's going to be very complex.
Okay. How much the maximum coupon rate? Is there any difference between coupon rate and interest over here?
So, very simply put, you should look at XRR or YTM. XRR is a technical term. YTM is yield to maturity. And you can simply put this XRR formula in Excel. It doesn't matter whether how you are getting it through coupon rate, interest, etc. Just look at the YTM.
So like 85,000 somebody is investing now. After 18 months, it becomes like 1 lakh. So the time period between each and XRR formula. Okay. Which exchange shall the deep discount new discount bond list on, and what is the listing date?
It is already listed. I think it's listed on BSE.
Yes, it is listed on BSE and got listed today itself.
Got
it. Okay. Again, same question is like platform like Incred and India bonds.
Yeah.
No. I think this is a different question, Ajinkya. So
some platforms allow third-party demats. We don't allow third-party demat. What is the reason? First is to smoothen investment experience. If you have third-party demat, selling that bond is you have to log in into NSDL or CDSL, add beneficiary, manually transfer, pay stamp duty, and it takes even after doing that, even if it will take 7-8 days, and making that first transfer will be it take couple of hours of time, and it will be very irritating. So when we open demat account, we don't charge anything. There is no AMC fee or any open account fee. It makes investment secure, more transparent. We can build lot of features. For example, now this like to claim LTC, you have to sell this bond before liquidity. If you're third party demat, it is going to be absolutely very difficult to sell it. On Wint'12, it will be experience like butter. You will like how you buy bonds, you'll be able to sell, right? So that is the reason. How does one sell through Wint'12? So we are slowly rolling out that program. You can reach out to our customer success team. In couple of months, it should be completely automated. You will see it an app. You can simply say what are in your dashboard. You'll see the bonds that you hold. You can simply click sell and go through that flow, activate that flow, and once it will be very similar to selling equities.
Correct. Perfect. Next question is by Akshat. Ugro Capital have cash flow from operation issue in past year. Is it safe to invest in their bonds?
I will check exactly the position on Ugro, but we are anyway going through a bad cycle, right? Most of the NPAs are on rise across every sector. Especially on Ugro, we'll check and get back to Akshat. Just write us on on our WhatsApp. So if I'm not able to answer, because I will talk to our risk team and who looks at Ugro and what are their views on it, and then we'll give you those detailed views.
Ajinkya, actually, we have brought just a Ugro bond on our platform, and there is no risk
So
or
if you have
something.
recently bought it, we are very sure that
you just brought, yeah.
Yeah, but all the NBFCs, if you'll see, they're going through their NPAs have increased, are on rise, right? One like obviously the cycle is turning, right?
Okay, I just put a message to Akshat after the next question so that he can reach out to us and we'll answer his query.
Yeah, but Akshat, this particular issue, what is that issue, and we'll ask our team who looks into it and answer the issue for you. But if you have brought the bonds, we are sure that we are comfortable with that point, and at least to put our own.
Next question is by Amit. Tax is deducted prior to TDS before disbursing maturity amount, or will it show profit while filing ITR?
So if you hold till profit maturity, then TDS will be deducted and you will get the rest of the amount. If you sell before maturity, there is no tax deducted at our end or at the NBFC's end, or there is no TDS filed.
Correct. Next question is, it would be good to have an explore option for the sold out bonds. Having an option to filter and sort with criteria on these sold out bonds would be great, so that we can go through the bond and use a notify option to get notified in case available, I believe.
Yes. So we have been slowly rolling out. When it is a new bond, we just pop out uh, on the asset detail page. But those bonds are getting sold out in half an hour today. So the liquidity is so good today, and we are very early. As we scale, right? And we are telling sellers that if you give even 0.25% discount, there are buyers, and they are seeing that. So it is completely smoothened out. But if we send out notification today, there is hardly any sell happening. Plus, there will be so many people coming in, they wouldn't get that deal, right? But we are exploring this. We are exploring for, let's say, mature investors or people who have invested in more number of bonds or have invested higher amount. Can we give them access to these bonds first? Is what we are exploring, whether it is possible in a regulatory framework. Stay tuned on that.
Okay. There's a question from Vishal. Which bond should I buy? Only A plus plus? Question mark. Can you share your recording on my mail?
Yes. So some investors do refer to rating. In our view, rating is just one criteria. In NBFC, there are far more, complex factors. So you should not just look at ratings. In fact, two of the biggest NBFC that defaulted in recent past in 2018 were AAA rated, right? And essentially, there were underlying like very big frauds, promoter frauds that led to it, right? So just rating is not, rating is not the criteria, only criteria. We do far more due diligence, and we spoke about that due diligence, right? On recording on email, I think you can ping us and we'll send you the link on WhatsApp. Just ping us on WhatsApp after the webinar.
Right. There's a question. If I invest 10 lakhs, 10 units and want to sell after 1 year, if my LTC is greater than 1 lakh, am I going to be taxed as per my tax slab? So this particular person will be investing not one single bond, 10 bonds.
So as soon as you invest more than 10 lakh, and I'm just telling you our understanding, we are not tax expert, we are not tax advisor. Investors are free to do research. Don't hold us, because I will tell you very simple interpretation of, and a conservative one is always good for in our experience. So why this special provision is because it is very hard for retail investors to invest, and this 1 lakh provision was in 2002. So it, like, if this product picks up and government wants to government wants retail investors to investment, if they want to encourage, they will increase limit. When at that time FD insurance limit was also 1 lakh. So we would ideally, as a bond platform, we would want this to be increased to 5 lakh, but till now it is 1 lakh, right? So if you invest 2 lakh, you don't qualify for that. It is not that you qualify for 1 lakh and for another 1 lakh you qualify as a tax rate. And I'm just telling you our interpretation. If you invest 2 lakh, you have to pay the taxation is as per your tax slab for the whole 2 lakh. It is not differentiate 1 lakh here and 1 lakh there. But again, we are not the tax experts. I am telling you my interpretation, and a conservative interpretation and a reasonable interpretation of the law. Right? We can also probably paste that chapter or that path.
I'll share that. Yeah, I'll share it. Ajay, can you take the next question till I'll just post it for him.
Yes. After maturity tax implications, if you hold till maturity, then your TDS will be cut 10%, and the whole interest income will be taxed as per your tax slab. Next question is, I should have DIS of 4-degree water for selling bonds. No, you don't need. It is completely online. You can simply enable EDIS or DDPI flow and sell it online. If you want, we can also give you DIS. But DIS is not mandatory. In fact, most of our investors will prefer EDIS. We are digital first platform, right? Please share ISIN of the newly listed deep discounted bond on my email. RG, yeah, we
Yeah,
can.
yeah, we'll answer.
Yes, can you just paste the ISIN ID?
Yeah, I'll paste the ISIN also. I'll share the team also. They'll send the link also of the particular report. Can you take the next question till then? I'll just communicate to the team.
Hello, sir. If I'm not coming under taxable loss, then will the TDS be deducted from my principal amount? TDS is not deducted from principal amount. It is deducted from the interest earned. And we are also enabling at Wint Capital this 15 GS form so that you can fill that form and claim, then TDS will not be deducted. But otherwise, TDS will be deducted. And it is not on the principal amount, it's only on the interest earned. Can bonds outperform stocks? Very different asset class. Bonds have fixed return. Stocks have volatility, right? In long-term stocks have in India and in a growing like India, if you believe in India story, stocks will outperform. So I personally believe that India story is very strong. So stocks will outperform bonds, but they are not replacement for one another. You have to take a portfolio approach. So they are complementing each other. Bonds cater to different needs. Stocks cater to very different needs. Yes.
Akshat, question is, you guys are doing awesome thing for retail investors. Are you planning for IPO in coming years? Last year, profit of Wint and market share of Wint.
Yes, thank you for the compliment. IPO, I think it's 5 years, and I like 5 years. When I say 5 years, is which means I don't know, but we are on right track path. Last year profit, I think we lost or loss. This quarter we will have a cash flow positive quarter is what we are hoping for. We are just breaking even here and there. Market share, I mean, we don't really have official data, but it is, I mean, our estimate it is more than 50%. Whatever, if I try to cross match numbers, it is more than 50%.
Wint
Plus,
Capital has been
again,
profitable.
like just just again a disclaimer, it's such a small market, right? We are not even 1% of the equity market, 0.1% of the equity market today. Right, so we all bond platforms have a long way to go. We have gotten some early advantage, doesn't count in long term. We have to still go there, outperform, keep doing it. Eventually things will line up, right? But I'm like, since you asked the question, I answered.
Ajinkya, Wint Capital has been profitable last year.
Yeah. I thought the question of about Wint Wealth Group and the market share that we told was about Wint broker platform, right? When can we expect FDs to be live on the platform? Suryodaya is already live. We are going with about 5 more banks live in 2 weeks, right? Or probably 3 weeks. By mid-December, we'll have 6 small finance bank live.
Yeah, currently it is on pause.
Or 5.
Currently it is on pause. We are working on the KYC flow.
Oh, yes. So
Yeah.
there were some observations. So it is on the pause. We are working on it. We will be back in a couple of weeks.
Yes.
Yes, we are at end of questions. We will be here half a minute more. If you have any questions, feel free to ask. We are happy to answer. Yes, again, a disclaimer, we are not tax advisors. So any taxation impact must be checked with professional tax advisors. We have told you our interpretation, but neither we are authority nor do we have any license regarding the same. I will ask our team to copy paste that para. The ID, can you copy paste for everyone's what that deep discount? Do you have access to it?
To the deep discount bond, is it?
Yes. Okay, I'm just copying it. Okay, I'm not able to find it. Anyway, we'll copy paste it. Okay. Dinesh has pasted here. I'm just copying that link for everyone's sake. Yes. So we have put in this circular. We have told you our interpretation, but again, like a clear disclaimer, we are not the tax advisors. What is better, FD or investing in bonds? Depends on your risk appetite and also your needs. If you want to stick to very low risk, FDs are better. If you're okay with little bit of reasonable risk and you want high returns, then bond could be better. But again, it is very dependent on your needs, your risk appetite. Isin shared about not showing in BSC. Can you recheck and share?
So I think it takes some time for it to get updated because we get the mail directly from BSC, right? So I think they upload after some time.
Got it. Do you report? Do we have repositories of this question? So I am whoever is this asking this question. Do we have their email ID? So can we send it to there?
I'm
Can you just
asking the email
paste your
address.
email ID again, RG sir? Our team is saying on exchange portal uh, it will reflect tomorrow morning. It is showing on NSDL website, but it is suspended as of now. It will be shown tomorrow morning. Anyway, we will send the ISIN to you on email, or you only anyway have it. Please check it tomorrow.
Correct. It takes one day to get activated and come show under that.
Yes, great. Thanks everyone for joining in. Hope you are able to answer your questions. If you still have any questions, feel free to reach out to us on hello@wint12.com or on our website. Happy investing and thank you for joining on a weekday evening. Thank you, everyone. Thank you, everyone. Good night.